What do you make of what's going on in the markets? We've seen them open up down a great deal today and dropping even more. Every day seems to be bringing even worse economic news.
Well, this is exactly what I've been saying was going to happen. I've been coming on Alex's Jones now regularly for the last several months, and this is exactly what I said was going to happen. I said that if the Federal Reserve raised interest rates, that the market would tank. That was one of the reasons I thought they wouldn't raise rates, because I thought they could figure this out. But apparently I gave them too much credit. So they raised interest rates, and the markets are tanking. Also, the economic news is horrific. I mean, if you look at the data that came out today, we are clearly in a recession now. The question is, how long have we been in recession? Did it start a few months ago, or is it just starting this month? But we're back in a recession, and Calenti is right. It is going to be a horrible recession. I think it's going to be worse than the Great Recession. So it will be a greater recession, and it's because of everything the Federal Reserve did to mitigate the damage back then. They just postponed the pain to a later date, and unfortunately, this is the later date, and the pain is about to begin. And it's very ironic because you had President Obama just give his ridiculous State of the Union address where he said everything is fantastic, it's the greatest economy ever, and I think he gave those same marching orders to Janet Yellen and her cohorts at the Federal Reserve, because they keep trying to pretend that everything is great too, because they don't want to admit they were wrong to raise rates. Of course, the real mistake was cutting them in the first place, because all they did is inflate a gigantic bubble, and now they've pricked it.
They cut them, and then they left it down for a very long time. And of course, as we saw with Alan Greenspan rolling up to the 2008 bubble that they created and then burst. I mean, he continued to cut interest rates over a long period of time, and then he continued to raise interest rates until they burst that bubble. But now it appears that it only took the very first interest rate, and now it's busting that bubble, isn't it?
That's because it's a much bigger bubble. The bigger the bubble, the smaller the pin. You need to pop it. And so the question is, when is the Fed going to acknowledge the weakness in the economy, and what are they going to blame it on? Because, of course, they have to pretend that some external factor is what caused it, and there's no way anybody could have possibly predicted it, even though it was one of the easiest things to predict. I think this is even easier than the financial crisis, which I also predicted, and which the Fed was oblivious to. Remember, even after the real estate bubble burst, they still didn't recognize the problem. They still didn't even see it was a bubble. So they don't know until all the wheels have fallen off the bus. And right now, that's exactly what's happening. They're still in denial. But I think that sometime in the next few months, they're going to have to launch QE4. They're going to have to reduce that rate hike. They're going to go back down to zero. And I think Congress is also going to come out with a huge stimulus bill that's going to include tax cuts for the middle class and massive increases in government spending. Everybody's going to vote for it because everybody's going to be afraid to oppose it. And it's going to send the budget deficit skyrocketing. And it's going to make it more ironic that, President Obama tried to claim credit for reducing the deficit. The deficit in his last year of office could easily be bigger than the $1 trillion deficit in his first year. And of course, the national debt doubled under President Obama. So he is the biggest deficit spender of all time. In fact, he will be a bigger deficit spender than every president that preceded him, from George Washington to George Bush.
Wow. And of course, one of the things that was also, I think, pretty predictable was the fact that they would not choose to audit the Fed, because that is really at the center of all of this. But we're not even allowed to look behind the curtain with all of this. That's, to me, the most amazing thing. And, of course, the thing that they never talk about in the debates, unless you've got Rand Paul there, and, of course, he wasn't there last night. So the Fed wasn't there. They're all talking about how they're going to have different levels, where their brackets are for income taxes, what their percentages are going to be, whether they're going to be flat or progressive or whatever. That's just really rearranging the chairs on the Titanic, isn't it?
Yeah, and for nobody wants to look behind the curtain there at the Fed. It's like, if you're eating at a fast food restaurant, you don't want to go into the kitchen and actually see what they're making. And, and especially since they're about to have to pull out the stops, because they're going to have to do even more crazy stuff this time, because the problem is much bigger. See, everybody wants to pretend that the Fed solved our problem. They didn't solve anything. The market would have solved our problems had the Fed allowed it, but the Fed didn't. The Fed prevented the market from working, and we had 7 years of 0% interest rates and 3 rounds of quantitative easing. And as a result, the economy today is far more screwed up than it was 7 years ago. The only difference is we still have all the low-paying service sector jobs that our college graduates have been able to land during this Obama recovery. But the jobs are going to start to go away quickly, right there. The service sector is going to be hemorrhaging jobs. It was a wealth effect and the false perception of a recovery that created these jobs. But now that that phony wealth is evaporating and the perception is being replaced by reality, a lot of these jobs are going to be lost. In fact, I think we're maybe a few months away from some huge negative numbers in the non-farm payroll, a big spike up in unemployment, and then even when the Fed launches QE4 and cuts rates to zero, it's not going to turn the tide. I think the unemployment rate is going to be rising for years. I think we're headed back above 10% officially, and who knows where we'll be unofficially with all the people that just leave the labor market. But we've seen the best days as far as the low unemployment rate and the job creation. And of course, everybody is trying to hang their hat on this one data point. They're saying, oh, we can ignore all the bad news because look, the jobs market is strong. No, you have to ignore the jobs market and pay attention to all the other news because the other news is forward-looking. The jobs news is backward-looking. The jobs are going to follow the other data. If corporate profits are collapsing, if retail sales are collapsing, if the stock market is in a bear market, all these companies are going to be cutting jobs. Look, Walmart today just announced they're going to have to shut down a bunch of stores. And the reason that Walmart wants to shut down stores is because they need to lower their labor costs because they were just dumb enough to raise everybody's wages in order to placate the Obama administration, who said that their wages weren't high enough. So now they're going to give out pink slips.
And of course, part of the employment impediment in terms of getting more people jobs, in terms of the labor cost, is Obamacare. Yeah. And they use that. They spend these unemployment numbers by playing games as to the definition of who's unemployed, and then counting part-time jobs with this, and people, dumbing this down to 30 hours a week as a full-time job, so that a lot of people at the bottom end of the service sector have to get 2 jobs to make ends meet. Yeah, I mean, it's just absolutely incredible what they're doing. And if you look at what's going on in terms of not only exporting jobs, but importing workers, you see that all the job growth since 2008 has pretty much come to immigrants coming in. 17% of the labor force now is immigrant labor force.
Yeah, so, and it's the ultimate in irony in that President Obama passes a law that destroys full-time jobs because in order to get out from under Obamacare, employers have to limit the number of full-time jobs that they have. And so now people lose their full-time jobs, but now those full-time workers are replaced by part-time workers. So now somebody used to have one really good job, and now they have 2 crappy jobs, where both those jobs still pay less than the one job he used to have. But now Obama gets credit for the extra job. Yeah. Because all they do in the jobs numbers is count the numbers. So 2 lousy jobs is better than 1 good job as far as Obama's concerned, but not as far as the guy who has to work these 2 lousy jobs for low pay. So he gets to destroy jobs and claim credit for creating jobs at the same time.
That's kind of like Common Core economics, isn't it, Peter?
Yeah, well,
yeah, that's what we get. And of course, in terms of what the banks did in terms of being bailed out, we just see Goldman Sachs being assessed a $5 billion fine. Here we are 7 years after the fact. They're still handing out some fines. I guess we're supposed to feel better that they're going to give us a little bit of mercy and not charge taxes to the people whose houses they've repossessed and all of this.
Yeah. Instead of fining them now, we should have just let them go bankrupt back then.
Yeah,
instead we bailed them out, and now we're asking for some of the bailout money back. But you know what? All these big banks, and I'll be anyways looking at the brokerage stocks. Goldman Sachs today is at a 52-week low. The stocks, dropped, I don't know, what, 25, 30% from its high, and it's going to keep falling. And all the big banks are in trouble right here. I think they're going to need fresh rounds of bailout money. So a lot of that money that they just paid.
A little bit of schadenfreude there, right? We're going to be right back with Peter Schiff. Stay with us. Welcome back to the Alex Jones Show. I'm David Knight. In the next segment, we're going to be talking to Leanne McAdoo and Jakari Jackson. We're going to do a panel discussion going over the debate last night and what has happened in the follow-up to that. We're talking to Peter Schiff right now. He's with, you can find him at Europac.com. That's his website. Of course, a frequent guest here with Alex and on many financial TV shows. As we're looking at the financial situation, we're down today between 2.5% and 3.5% on most of these indices, and it has been down all day. That appears to be the new normal for 2016. This segment, Peter, I'd like to talk to you about the strength of the dollar. I mean, we were talking to Gerald Salenti about the instability in Saudi Arabia. Of course, the petrodollar has been a big part of the reserve currency, the bubble that they created, if you will, in a way with the petrodollar when they took us off the gold standard. And now the key, the linchpin to that, of course, is Saudi Arabia. They've got a Vietnam-like war going on in Yemen. They have internal unrest, especially after all these executions at the beginning of the year. So there's a lot of instability there. What do you think about the strength of the dollar?
Well, it can't last. And first of all, as strong as the dollar's been recently, the yen and the euro are actually stronger. And, you know, the Swiss franc, which is currency I like better than those. But what's driving the dollar is the false perception that the U.S. economy is still strong, that it's going to keep growing without recession, and that the Fed is going to follow through with all the rate hikes that it's been signaling that it's going to deliver. And I think this is a complete fantasy. I don't know why it's taking so many people so long to figure out that they've been wrong. But, you know, this has happened in the past. When the dot-com bubble first burst, the initial reaction on Wall Street was, okay, it's no big deal. It's contained to technology and dot-coms and internet stocks. It's not going to affect the overall market, and it's not going to affect the economy. Well, they were wrong on both counts because the overall market ended up going down by about 50%, and we went into a recession. And the NASDAQ, of course, went down 80%. Same thing happened in 2007, 2008, when the subprime market blew up. Nobody was concerned. Nobody at the Fed was worried. It was contained to subprime, they told us. And then even after it was obviously not contained, when there were problems in the entire housing market, then they said, well, it's just housing. That's just one part of the economy. The rest of the economy is going to be fine. The markets are going to be fine. And then it all blew up in the financial crisis of 2008 and the Great Recession. So people have a history of ignoring the obvious, you know, even at the point where it's, you know, flashing like a neon sign. So I've been warning about these problems now for years. And now, right, they're obvious. They're here. Everything I've been saying was going to happen is playing out in bold, in Technicolor, right before the eyes of people who have been oblivious. And now they still can't even see it. But, you know, they're going to at some point, right? The market's not going to stop falling. The economic data is not going to improve. And ultimately, the one lone piece of good news that they think they have is going to roll over too, and that's the job numbers. And people have to be prepared because the dollar is going to break. It's going to be a vicious decline when it happens, and gold's going to go the other way. What's been restraining gold has been the appeal of the dollar. But when people realize they bought a bill of goods when they were buying the dollar, they're going to rush to buy gold. And, you know, you guys mentioned all these specials that you're having over at Alex Jones. You know, we've been having a special this week at my gold company at Schiff Gold, and we're selling maple leaves, 1-ounce maple leaves, for as low as $33 over spot per coin, which that includes whatever our markup is. And that's about the cheapest price you're going to find anywhere. I don't think we've ever sold them that cheaply over spot. And so I'm not sure how many we have left because we bought a bunch of them, and you know. But look, this could be the last chance to buy gold under 1,100. You know, because when people figure this out, there's a lot of people that are short gold that have to cover. A lot of people that haven't been buying, that are on the sidelines, are going to try to buy it once. So this is going to be the big trade. I mean, the big short last time was subprime. The big short now is the dollar. And the way you play that is to be long gold. And, you know, the best way to do that is with real physical bullion. And again, I love the Canadian maple leaf. It's a great coin to own. And if you can get it for $33 over spot with spot below 1,100, I mean, you should do it. So
you're talking about, yeah, you're talking about Obama essentially is the chief person who is ignoring reality. And we saw this with the State of the Union address the other night. How he's
not the only one.
Yeah, I know, but he's basically putting that narrative out. People are buying into that. If the Federal Reserve, you believe the Federal Reserve's first interest rate increase is the pin that has burst this bubble, if they just continue to ignore reality and continue to do interest rate increases, as we saw Alan Greenspan do, he did a series of increases. What do you think is going to happen to that? And we're just about, well, we got about 20 seconds.
Well, I don't think they're going to get that far because they're not supposedly going to raise interest rates until maybe March or April. But by then, it might be obvious to everybody, including the members of the Fed, that we're in a recession. And how can they raise interest rates in a recession when they normally want to stimulate the economy, not sedate it? You know, so this economy is so much weaker. The problems are so much bigger. We don't have the luxury of all those rate hikes that we had.
Thank you so much,
during
Peter
the Greenspan
Schiff.
era.
Appreciate it. Thank you so much.